Hi guys, Ben here and welcome to Motivation to Invest. A hedge fund is a managed fund which is designed to protect your portfolio from market uncertainty while at the same time growing your investment. One of the largest hedge funds in the world is Bridgewater Associates, founded by the legendary Ray Dalio. Ray Dalio is famous for his books on principles in addition to predicting many of the previous stock market crashes. Now, I have numerous videos on Ray Dalio's rules for success and stock market predictions, so you can check those out on the link below. So how do these hedge funds make their money? Well, hedge funds make their money by charging a management and even performance fee. This is usually between 2 and even 20% of the entire portfolio, which can seriously impact your investment returns. Studies have shown that the top 10 stocks common across all hedge funds have actually returned over 185% since 2014. This has beat the market, including the prestigious S&P 500 ETFs. Now, previously I did a video outlining my top 5 most popular stocks in hedge funds, and due to popular demand, this video is going to include stocks 6 through 10 to give a full top 10 list of the most popular stocks in these hedge funds. By the end of this video, you should have gained real insight into these hedge fund stocks, allowing you to invest in them without paying those crazy management fees. So without further ado, let's dive in.
Coming in, flex, I just wanna win.
Welcome back guys to Motivation to Invest. Before we get started, go ahead, smash that like button for the YouTube algorithm. That allows us to continue creating more great content like this for you guys. In addition, if you would like more investing tips and exclusive stock market picks, which I personally have invested into, then you should definitely subscribe to this channel. Be sure to turn the notification bell on. That way you'll get notified when I release future stock picks. With that being said, let's get into the video. Current number 5 is Apple, ticker symbol APPL. This was the best performing FANG stock of 2019, thanks to its service business momentum, which offset iPhone related weaknesses. The company even expanded its product portfolio, which now includes the new Apple Watch Series 5, streaming service Apple TV Plus, and of course Apple's AirPods, which silenced the doubters who didn't think Apple still had those unique design skills. Right guys, so diving into the numbers, we're over here on the Stockopedia platform. Now this is a great platform. I use it all the time to analyze stocks for you guys on this channel. I'd say one of the most unique things about this platform is the fact that it's got a stock rank. So what this does is rank every single stock by 3 variables. You've got quality, value, and momentum. Now this allows you to look at a stock quick and analyze whether it's a good buy or a bad buy. So for example, in this case, Apple has got a stock rank of 91. Now, if you're interested in finding more about this platform or you'd like to sign up, then basically I've been offered a special discount link exclusive to the viewers of Motivation to Invest. So basically, if you sign up using the link in the description to Stockopedia platform, you'll actually get 25% discount. Now that is a premium discount considering the amount of research which has gone into designing this platform, and it's so detailed. So yeah, link's down in the description. Check it out, see what you think. So diving into the numbers of Apple. So today, Apple currently has a share price $331. So as you can see, it crashed in the first quarter of 2020 due to the global health crisis, and then it's risen back up now to looks to be a potential all-time high. Yeah, so it's a new all-time high, and as you can see, share price has been rising over the past 5 years and previously. Looking at the total revenue, we can see that it's been steadily rising, 7.31%. Now, I would call this company at the stage that it's at maybe a slow grower at this stage, because it's still a great company, it's very well established, but due to its size, it's now $1 trillion company. It will be growing slower than other smaller companies. Dividend growth. So the dividend has been growing and it has been increasing regularly. Dividend per share, 10.6% average increase, which is great news. Let's look at the prediction. So you've got revenue here, It's forecasted to be a slight decrease for 2020, which makes sense given the current economic conditions. 2021, increase back to normal. Same with the net income and earnings per share. Analyst consensus. This is another great feature of Stockopedia. So this has got analysts from all over the world. So you've got people here from JP Morgan, Deutsche Bank, Barclays, Morningstar. You've got analysts from all over the world, and they give their thoughts on the particular stock. So in this case, 7 say hold, 3 say sell, 17 say buy, 12 say strong buy. Now checking out the current ratio. So the current ratio is basically the short-term assets over the liabilities. So it's how many times can this company pay off its debts with its current cash. So 1.5, generally you want to be looking for a company which has got between 1.5 and 2 or even higher, and that means it's got great cash flow to cover its debts. So 1.5 is okay for a company such as Apple. P ratio 23.6, a little bit high, but then again it is Apple. Looking at the discounted cash flow calculation, we can see that its share price is currently $328 and its fair value is $276. So it says it's currently 19% overvalued. So that's just something to be aware of. There's also been a couple of insider trading sell-offs. So on the 12th of May, $1.3 million was sold off by Chris Kondo. He sold his shares at $300 a share, which is actually lower than it is now. So that's interesting. Comment number 4 is BristolMyers Squibb, ticker symbol BMY. BristolMyers Squibb is a pharmaceuticals giant based in New York City. BristolMyers Squibb manufactures prescription pharmaceuticals and biologics in several therapeutic areas, which include cancer treatment, cardiovascular diseases, and even psychiatric disorders. Healthcare is a great defensive industry to invest in, as people will always require medicines in a recession or not. BristolMyers Stock is currently in 122 different hedge funds with over 7.8 billion in fund positions. Some noteworthy hedge fund shareholders include Philippe Lafont and Gabriel Plotki. Right guys, so diving into the numbers of BristolMyers Squibb. Now this is a very interesting stock. So the share price is currently at $60 a share. At the latest crash in 2020, it dropped to $46, and then before the crash, it was around $66, $67. So it seems to have returned approximately to its normal values. Checking out its stock rank of 87, which is very good. Momentum of 97, value of 41, quality of 79. Looking at the total revenue, so we can see there's a compounding annual growth rate of 10%, which is pretty good for a company of this size. Operating profit, 23.8% compound annual growth rate. Earnings per operating margin, sort of similar, slight decrease. Dividend growth, 2.64% compounded annual growth rate in terms of dividend growth per share. Now let's look at its revenue. So revenue predictions, as you can see, it plans to increase its revenue for 2020 and 2021. Net income also an increase. Now that makes sense as healthcare spending, I can imagine, will increase for all healthcare providers. Forecasted earnings per share is also pretty high. Check out the analyst consensus. Got people here from Morgan Stanley, Deutsche Bank, JP Morgan. 5 hold, 5 buy, 6 strong buy. So no sell-offs, and a lot of people who say buy, buy, buy. Current ratio 1.66, so it means it's got enough cash to cover its short-term debts. Price to book value 2.78. PE ratio 9.1. I'd say that's very, very good for the industry. Now this is really interesting. So according to this discounted cash flow calculation, it says the fair value of BristolMyers shares should be $170.55, and it's actually just $61.30. So that looks like it's definitely a good buy right now. Ooh, this is interesting though. So despite the discounted cash flow calculation showing that the stock is undervalued, Some insiders have been selling off. So 26th of May, $195,000 at $61 a share. 21st of May at $1.5 million at $62 a share. In March, then again, nearly $1 million sold off. So that's very interesting to see. Let's see who these people are. Adam Dumbo. So yeah, none of these people are on the actual board, which is a good sign. But it's still interesting to see these sell off. $61, $62 a share. So they've sold it at this price here. Comment number 3 is Mastercard, ticker symbol MA. Mastercard is a fantastic company which makes its money by taking a small percent of every single transaction which uses one of its cards. However, it doesn't take this commission from the customer, but it takes it from the financial institutions, such as the banks. As the old saying goes, sometimes you need cash, but for everything else, there's Mastercard. Mastercard stock is currently in 125 different hedge funds, with over $14.6 billion in fund positions. Some noteworthy hedge fund shareholders include Tom Russo and Charles Akur. Right guys, so diving into the numbers, we're back on Stockopedia. Let's check out Mastercard. It's got a stock rank of 71, momentum of 87, value of 11, quality of 92. Now this is exactly what I predicted for Mastercard. Overall, it's a great stock, but it's usually overpriced. So checking it out here, it's had such a steady increase, and I love stocks like these. They're just so calm and they just increase steadily. They haven't got much volatility, which is great if you're already invested. And then obviously the crash came, we saw a drop. This was the perfect time to buy. I purchased it probably just as it was falling, probably around here. And then it's risen back up $300 a share now. Before the crash, it was around $334 a share. So total revenue, it says it's got compound annual growth rate of 12.3%, which is quite good. Net profits also increasing. So for 2020, if we go down here, dividend, steady increase in dividend, 24.6%, which is fantastic. So if we go in and look at the revenues, we can see it's predicted to decrease for 2020, which makes sense given the current economic conditions. People are not spending as much. And then it's forecast to increase again by 2021. And it's also similar situation on the net income and earnings per share. Checking out the brokers. 4 hold, 22 buy, 11 strong buy. Current ratio 1.87, so it's got enough cash to cover its short-term liabilities. P ratio 41.7. Now that is extremely high. So that's the major issue with this stock. Looking at the discounted cash flow calculation, we can see it's currently 51.8% overvalued with a fair value of $154. There's also been a few insider sell-offs which are interesting. So 5.8 million was sold in shares by Stephen Freiberg on the 27th of May, and also another $500,000 worth of shares by Julius here on the 12th of May. It's been a small purchase, but there's been a lot of sell-offs. 25 million there, 37 million there, 37 and 36 million, 37 million. There's been a lot of sell-offs. This is not a good sign at these share prices. To me, that says that the people inside the company know that this share price is currently overvalued. It's still a great company, you've just got to keep an eye on it for when the share prices drop. So you've got this guy, Julius, he's the independent director, so he's been selling off his shares. Stephen Freiberg, another independent director, he's been selling off his shares. All right, it's a worrying sign. Comment number 2 is Visa, ticker symbol V. Visa is a similar company to Mastercard in that they take a small percent of every transaction using one of its cards. Visa is currently in the portfolios of 143 different hedge funds and has over 16.8 billion in fund positions. Some noteworthy hedge fund shareholders include Ken Fisher, the great Warren Buffett, and it even makes up a large portion of my own portfolio. Right guys, so diving into the numbers of Visa, we're back on Stockopedia. Stock rank 78, momentum 88, value 15, quality 98. So it's currently got a share price $193. Before the crash, it was $213, and then it bottomed out at around $135. I purchased shares in Visa around here, $160. So total revenue, compounded annual growth rate 12.6%. Similar to Mastercard, it's expecting a slight decrease in 2020 due to the economic conditions, lack of spending, and then an increase again in 2021. Net income, similar idea, and earnings per share. So what else we've got here? Yeah, so there we go. There's those figures. Operating margin, 62.1%, which is fantastic. Earnings per share, 20.1%. So it's growing its dividend, which is fantastic to see. Current ratio, 1.25, which is okay. It means it's got enough cash to cover its liabilities. It's got a strong balance sheet. P ratio is high. So P ratio 35.6, that is high. So it means the valuation is high. Makes sense here. Value is high. So yeah, checking out the discounted cash flow calculation. This has calculated Visa to be 40.7% overvalued. So $199 a share. It says its fair value should be $141 a share. So that's just something to be aware of. It's a great stock. You've just got to keep your eye on it. Now, there has been some sell-offs which confirm that Visa is currently overvalued. So over $7 million of shares were sold off by Vansant. And on the 28th of May, over $5 million of shares were sold off. There's also been a few other sell-offs throughout the year. So now that's not a good sign to see. Comment number 1 is PayPal. Ticker symbol PYPL. PayPal was founded by the great Elon Musk before being acquired by eBay. PayPal is one of the greatest companies which actually made online transactions trustworthy. These days, PayPal has been facing increasing competition from modern payment services such as Square, which is fast gaining traction. To combat this, PayPal acquired Venmo in 2013 via the acquisition of Braintree. Venmo is a social payment system used by millions of people to make and share payments with their friends, family, and even approved businesses. Venmo is very popular with millennials. It's basically used, say a group of friends go out for dinner and they wish to split the bill. Then you can do this all over Venmo with no hassle and no stress. PayPal is currently held in 126 different hedge funds with over 6.2 billion in fund positions. Some noteworthy hedge fund shareholders include Bruce Clark, John Campbell, and Gabriel Plotkin. Right guys, so diving into the numbers for PayPal, we can see it's got a stock rank of 67, momentum of 87, value of 14, and quality of 83. So this seems similar to the other financial stocks on this list, and that it's a great company, but overvalued. So the share price is currently $156 a share, given that before the crisis, it was only $122 a share. Now, to me, that just seems overly optimistic given the current economic conditions. Looking at the revenue, we've got 17.2% compounded annual growth rate, which is great to see. They have predicted a revenue increase for 2020, which is different to the other financial companies on this list. I believe that is mainly due to the online transactions of PayPal. 2021 also predicted a revenue increase. Net profit is also predicted to increase massively. Operating margin, no dividend details there. So yes, the revenue increase there, net income and earnings per share. So according to the analysts, 7 hold, 20 buy, 15 strong buy. So yeah, it is a fantastic company. Just a very high valuation. Current ratio 1.39. It's got enough cash on hand. P ratio 42.6, which is crazy. Like, it's just so high. Let's check out the DCF. So the DCF, share price versus fair value. According to this, it's 81% overvalued. With its current price, $153. It says its fair value, looking at discounted cash flows, should only be $85 a share. So Visa is PayPal is a great company, but yeah, it just seems as if the price is very high at the moment. There's also been a sell-off 4th of March, $247,000 at $109 a share. I currently own a small position in Square, but I'll be keeping my eye on both Square and PayPal and purchasing more shares on the dips. Right guys, so there you have part 2 of my top 10 most popular stocks held in hedge funds. These were stocks 6 through 10. For the real top 5, be sure to check out my previous video. I'll leave that in the link below. So what do you think of these popular hedge fund stocks? Do you have them in your portfolio, and what are your reasons why? Comment those thoughts below. Also, if you found this video informative, please smash that like button. That really helps us out with the YouTube algorithm. And with that being said, I'll see you guys next time.
Coming in, flex. I just wanna win, LABB, who we running with, coming in, flex. I just wanna win,